Today's guest on Get Paid is a true pioneer in mortgage tech. With over 25 years of experience building and scaling fintech platforms, Jim Cutillo has dedicated his career to solving one of the most persistent and costly challenges in mortgage operations: the industry's deep reliance on data and documents, and frankly, BPOs. After successfully taking a Stonegate Mortgage public in 2013, a company that generated over $300 million in revenue, take that sass, most people would have kicked back on the beach somewhere and relax. Not Jim. He looked at the mortgage industry again, and he saw a dependency that drives over $8 billion, that's billion with a B, of manual labor costs every year. That is more than $1,000 per loan. Just to give you context, this is $1,000 just to process, validate, and do a bunch of other dependency resolving things that have nothing to do with you getting your loan to actually pay for your home. And it's $1,000 out of your pocket that you'll never see back on process fees. Well, he's back to solve that problem with Alpha7x, where he's creating an army of digital AI agents designed to do the work of humans across the entire mortgage supply chain. Despite all the technology advances, the mortgage process actually takes 12 days longer than it did 10 years ago. Just think about that. Jim's mission is to fix these broken systems for once and for all with solutions that benefit both the lenders and the consumers. If you're ready to see how AI agents can transform yet another industry, super complex, this one, the mortgage industry, is $15 trillion. Trillion dollars from the ground up. Listen up. Jim is going to show us how he gets paid. Jim, so good to have you here. I am always amazed of where AI agents are showing up in every nook and cranny of the economy. And now we're talking about home buying and mortgages. So tell us a little bit of what Alpha7x does.
Alpha7x is focused on reinventing work in the mortgage industry. So we've created an army of digital AI-based agents that are designed to do the work of humans that are today in the loop across the whole mortgage supply chain.
And you are a successful entrepreneur. So you've been in mortgage tech for a very, very long time. And what has been the evolution of mortgage tech in your mind? Like, how do we get here?
Yeah, Manny, I've been in the business for about 30 years, and the process hasn't changed in 30 years, although the technology has, right? So if you think about it, 30 years, 20 years ago, we were doing the same process step by step that we're doing today. I would argue that even though there's been a lot of advancement in technology over that 30-year period of time, that the cost today is at a record high for producing a mortgage. And the time it takes to close a loan has actually extended by at least 10 to 12 days from where it used to be as early as 10 years ago. So I think we're actually going in the wrong direction from a technology perspective and a cost perspective.
Wait, why is that happening? Like, how could it be longer now? We have more information, we have more technology, we have computers to talk to other computers, and things take longer?
Yeah, I think what's happened is, for example, let's take one area, right? So if you look at things that happen after your loan closes, right, it goes from one system to another system, right? And that process is challenging because the data and documents required to go from one to another system aren't always normalized, right? So it really is a data problem in our industry, and nobody's really been able to solve that. And a lot of the data is unstructured because it's in the form of documents, right? So you get stuck. I call it staring and comparing data and documents against system data all day long. So as more and more technology was introduced, you've created more complexity. And then you have vendors that are doing work for you remotely, and those vendors are on different systems, right? So it's really disparate systems, siloed data, and fragmented processes that have caused this sort of epidemic, if you will, of rising costs and extended term times.
So how does that manifest? So you're a family, you're buying a home, you apply for a mortgage. This is a very stressful period of your life where you're, trying to figure out where you're going to get the mortgage and the right rate and get all the paperwork in. Like, how are you feeling if this process gets elongated? What's not happening?
Well, buying a home is a stressful process for anybody, right? I mean, I'm sure you've gone through the process. I've gone through the process. It involves emotions as much as it involves, logical reasoning, right? So it makes it harder for somebody, I think, to make that decision to buy a home because the process is so complex.
Right.
And interestingly enough, as the cost to produce a mortgage has gone up, that really goes back to the consumer in the way of higher rates, right? So all the work that's being done today, the $12,000 it takes to manufacture a loan, that's passed on in the form of higher rates to the consumer. So they pay for that for 30 years in their mortgage if they have a 30-year mortgage.
Wow. So the consumer ends up paying for the inefficiencies of this loan process.
Yeah, absolutely. Yeah. Yeah. So if a lender is more efficient, maybe they can offer, a slightly better rate or lower closing costs. If they're not efficient, they're going to have to pay for it somewhere, and they're not paying for it. The consumer that's getting the loan to buy their home, whether it's a first time home buyer or second or third time home buyer, they end up paying the bill.
Wow. So what was the genesis of your idea to start this company and go agentic? Like when do you wake up and be like, this is nonsense. This got to stop?
Well, what's interesting is, this is sort of my third company where I've tried to solve this problem, right? And so the problem is really a data and document orchestration problem. And so the first time I built it, I used technology that today would be considered obsolete. The second time I built it, I used AI, NLP, robotic process automation, right? And I got 75% of the of where I wanted to be. Um, so then when a couple years ago, and even more so now, the tools that are available to truly build an agentic AI agent that actually can do the work have now matured, right? So we've got LLMs, right, that are able to help facilitate it, knowledge graphs. So these tools have just really matured. And I look at it this way, it's like the last mile, right? So it's like, yeah, you could be doing OCR, NLP, AI. AI is a great buzzword, but to actually get an AI agent to work like a human, it needs contextual reasoning and it needs adaptive learning, right? And that's the piece that's new today that we've never had before, right? And that's what gave me the idea of, I didn't want to build another technology platform, and I don't want to
Right.
sell technology. I want to build digital workers that you can hire and use in your organization to drive down costs and eliminate manual tasks, whether it's checklists or what have you, right? So those manual tasks today cost about $2,200 of the 12,000. So it's 10 to 15% of the overall cost of the loan today.
Oh, wow. So and who gets paid? So along in the old world, you have these different processes, you have these different tools. Now you also mentioned when we were talking last time, there is these BPOs are getting in the game and doing this manual for you. So how many mouths do you have to feed in the process from, beginning to end and then have finalizing that loan right now before you showed up to the game?
Well, there's, in addition to, there's people that obviously work in the organization. So you have your human labor force, if you will.
Right.
And BPOs are something that popped up because, and a lot of BPO models use offshore labor, right? So the idea there was, well, our labor costs too much. Let's ship it overseas or offshore and have somebody do it cheaper, right? But that model doesn't really work anymore because it's also labor constrained. And the
Right.
systems they're using, in many cases, are the same systems the originator's using, and they just have access to the originator system. So they're just doing stare and compare cheaper, right? So
Yeah.
it's a business model that I think is, with the advent of AI agents more specifically, it kind of says that their business model is obsolete.
That's incredible. So walk us through how your agents work. Like what kind of work are they doing? What forms are they filling? How does it go from beginning to end and mortgage created?
Well, again, we're delivering the equivalent of a human labor force, right? So if you think about it, you have a job in mortgage loan origination, you're processing a loan, right? So we have an agent that does mortgage loan processing. You are in the post-closing area, and your job is to review a whole bunch of documents that came back from the closing agent, from the title company, like that you just signed as a homeowner. those documents get re-reviewed when they come back from the title company, right? So that's all work that we can do with an agentic AI agent, right? So our agents are the equivalent of a role within your organization. And we have about 15 of them right now, and we're continuing to expand and build those, right? And
Right.
so, you know, we did a use case or a proof of concept for a large bank, with doing OFAC checks to make sure that they're not lending money to somebody who's on a watch list, for example, right? And
Right.
I was shocked at the number of people they have doing the process today. So they have 15 people manually doing this process. And with our agent, they'll need 3 people, right?
That's
So think about
incredible.
that. Yeah, yeah.
So how are you getting paid? So like how are you capturing the value that you're creating for all these banks that don't need the labor force to do that anymore?
Well, that's a great question. So we decided to switch our model to outcome-based pricing, right? So when we introduced the product, we didn't necessarily have that in mind. It became obvious pretty quick that that was the best way to go. So like if we come into an organization and we can save them, say, $100 with one of our agents, and our pricing would be a percentage of that $100, right? So we're aligned, our incentives are aligned right out of the gate, right? No, we don't charge seat pricing. We don't charge licensing fees, just like the SaaS vendors do. We don't charge per loan like the BPO lenders do, right? We are truly making money only if we're saving them money.
It sounds like a no-brainer, to be honest. Like how could you like so in a world, Jim, in a world where you dominate, right? Like where agents are the norm as opposed to the exception. What happens to what happens to the incumbent? So what happens to the software vendor, the SaaS vendors, the BPOs that are all, in the midst of the mortgage industry? What's going to happen to them?
Well, it's interesting, right? So it's not that their technology is obsolete, right? Because our agents work with their technology, whether it's a SaaS platform, a loan origination system, but but the client becomes a lot less reliant on that system, right? Because they're not working in it as much every day because we're doing the work, right, for them, just like their
Mhm.
humans are doing it, right? So,
Right.
so at the end of the day, where the SaaS vendors and I think the BPOs have a limited timeline or a limited amount of life left, is their business model doesn't work. It's not outcome-based pricing, right? It's
Right.
not, their incentives aren't aligned with their client, and their clients still have manual labor, right? So it's like you can't really argue that an agent is a better solution, both short and long term, than continuing to build new features in a SaaS platform.
We talk a lot here that the SaaS business model itself is dying. And is dying for exactly the reason you said. It's not it's hard to attribute success to it. So you end up paying for this seat that needs to be actuated by a human, and you have no idea whether, what kind of what kind of outcomes are you getting out of that. What else is dying in your mind? Like what other models are not gonna be successful? Is the BPO model successful? How do they charge? Like illuminate that for us.
Yeah, I think the BPO model has the same problem, right? It's labor based at the end of the day. There's people in the loop doing the work. So, yeah, if you do the work offshore, it's cheaper. But our agent is a fraction of that cost and it's outcome based, right? So you're only paying for results. And I think that's the difference. Like, how do you go from collecting licensing fees or seats as a SaaS vendor or as a BPO vendor charging per loan or for each process you support that's labor based? Like, I don't know how, like to me, and I was the CEO of a publicly traded mortgage company. So I've lived this, right, with BPO
Right.
vendors
Right.
and SaaS vendors all my life. And it's like I could change vendors and I still had the same problem. Now with BPO, it's just like I moved the cheese. I put it somewhere else, right? It's like, okay, give them my problem, cheaper, right? Well, now the question is, why wouldn't I want to work in a model where my partner is really a partner and shares in my success, right?
Right.
Like it's like that to me makes more sense. And with a agentic AI or AI agents, we now have that opportunity. So as a CEO of a mortgage company, if I'm sitting there, I'm like, okay, these vendors that are charging me, BPO, SaaS vendors, I look at that, that's a cost. That's going to hit my P&L, right?
Right.
I hire an agent, that's going to be a huge
Right.
save. It's going to reduce it's so that I don't even look at them the same way.
Oh, interesting. So what? I have a hard time believing that that the incumbents are just gonna give up the fight and just let you have it. So why wouldn't be able they themselves to come up with the agents that you're building to address the same problem? What's preventing them from innovation?
Well, I think they're stuck in a world where they're workflow driven, right? They're all about the workflow, and in my opinion, this is not a workflow problem, right? So their system itself doesn't support the model, right? So they can't really, now can they go build their own AI agent? Sure, they could try to build AI agents, but then what are they telling their client? They're telling their
Right.
client that, yeah, stay on our platform. We're going to give you an agent now. It's kind of like, I don't know. Like, I don't think those two things really kind of are aligned, to be honest with you.
Yeah.
Um, but we'll see. I mean, like, just from my perspective, we just filed a patent, right? So we believe, and I think that, a patent would be the way to prove it, that our architecture and the way that we've created these agents, we built a utility to configure an agent without writing code. So we intend to put the
Mm.
power of these agents on with our users, right? To say, hey, if you need an agent that does these steps, these tasks, here's how you build it. And they don't need to be technologists to build it. And they don't even need to understand AI to build it. They can just literally go in and say, okay, I got these 5 tasks I want this agent to do, and configure that and literally have an agent working for them in 2 weeks,
Wow.
right? Just like you hire somebody. You hire somebody, you hire them, you train them, and then they know their job and they do their job, right? So our whole business model is we're a workforce multiplier, right? We're not taking anything away. We're adding to it, if that makes sense.
Yeah, no, that's incredible. And the fact that you're charging per outcome makes that, you only make money when your customer makes money. So there's full alignment in your value proposition.
Yeah. Yeah, and it's delivered as a managed service. So it's not like the client. I mean, I'm saying this, but they want to understand AI because AI is sort of the big buzzword this year in mortgage, right? So everybody's doing something with AI. I would argue everybody's thinking about AI. I'm not sure anybody's actually doing any work with it yet. And so we deliver it as a managed service. So it's all cloud based, it's secure. So, it meets all the requirements for financial institutions. It protects the PII, personally identifiable information, account information, loan information, and it runs in a stateless architecture. So for a large financial institution, all those controls and audit trails and logging and everything is all built into it. And so if you think about it, if you have humans working in your system, you don't even have all that transparency into the work that they did, right? But you want to have it because you're in an industry that is, very reliant on compliance and regulatory control. But when you outsource things, even to a BPO, you don't have that transparency and control. You don't know what their people are doing. They could be screenshotting the screen of the system with the social security numbers on it. You'd never know.
Right.
This is a risk reduction play as well for a large financial institution. We want to take the risk of our information being spread wildly throughout the internet with some sort of data breach, right? And this is a way to actually do that.
When you're buying a home or when you sell or yeah, when you're buying a home, you don't think about this kind of things. Like you don't think that you just handed a document to a lender or to a mortgage officer and that's gonna go somewhere abroad where you have no control of your information because everything is in there, like your social security, your bank statements, even maybe your bank account. So that's I had no idea. Like now I'm really worried, to be frank, about what happened to my information when last time I bought a house.
Yeah, I mean, it should be a concern, and organizations have to, be SOC 2 compliant, ISO compliant, right? And so there's ways to test an organization's readiness for protecting your information. But when you start outsourcing to BPOs and when you use other vendors' software to do the work, there is that risk, right? And so
Right.
you don't want, PII being transmitted throughout the internet in a way that could allow somebody to get access to it. And I'm not suggesting that there's a problem in the industry with that. What I'm saying is that when you think about, the risk that you take as a homeowner, you're taking a risk anytime you upload or give somebody a document, right? And so that has to be dealt with and managed in a very effective way.
Right, right. How big is this industry, James? Like how what's the size of this problem in the US?
There's about 6 million new loans a year done, whether it's for purchasing homes or refinancing, but the amount of mortgage debt outstanding, it's $15 trillion dollars roughly, right? So
What?
60% of all homes, yeah, 60% of all homes in the US have a mortgage on it. So it's a very large asset class, and that asset is all based on data. So, it's a pretty big problem when you think about it that way. But, if there's 6 million transactions a year and each one of those transactions has over, you know, $2,000 in manual tasks that are done by humans, then, it's a pretty big market for us or for AI agents to address.
Right. So as this asset class gets packaged and resold, like I remember that movie, The Big Short.
Yeah.
The whole movie was premised on having all this information about homes and the quality of the mortgage and all this stuff. So are you in that business now? So are you providing the information or that's gonna go into repackaging of loan, doesn't get sold to second the third parties, et cetera?
Yeah, I mean, that's part of what our system covers, right? So it's you want to be able to rely on the data and the data you have being certified, meaning that our system or our agents are basically ensuring that a loan is saleable and serviceable in the secondary market. Now we're not opining on the risk of that loan, which is what the movie The Big Short was all about, right? Which is, hey, we're originate a whole bunch of loans that we know there's no way anybody's going to pay us back, right? I mean, that's basically what happened, right? We were doing
Right, right.
loans with no income and no asset verification. So literally, and these are true stories because I was in the industry at that time. There were loans that were done to a taxi driver for a $2.5 million house, and he didn't have to prove his income or his assets to get the loan, right? So you know that he can't afford it, but you're still going to give him the loan, right? So it's kind of like it was a recipe for disaster. I don't, and it was greed that really took over, right? And that whole machine, that was built, you know, nearly sank the U.S. economy, as you guys are probably aware of, right? So, and it took quite a few years for that, sinkhole to be refilled and get back to some new normal. But there's still a chance that we're going to go through a similar cycle. I mean, right? Because, we had a huge reduction in interest rates post COVID, right? And it drove a buying frenzy of new homes because the interest rates were so low. But now that interest rates are up, the market's cooled, right? So it's half the size it was back in 2022, early 2022, and then rates jumped up.
So you're operating in a $15 trillion market. How big can Alpha 7x get? Like what's in your wildest dreams, like how big is this company?
That's a great question. I don't think we've thought that far ahead. I think there's plenty of application for AI agents. I mean, we could go do this in insurance. We could do it in other industries, that any industry that is data and document centric, right? And there's tons of them that still do that, right? So we're dealing with residential mortgages. There's also asset-based lending. People are doing car loans, boat loans, right? So anything where data and documents are required to make a decision, we can deploy our agent. And that's one of the reasons why we patented it. And even though we, are only focused in the mortgage domain today, I think agents have a broader application than that. And what I've seen is I've seen a lot of people building general agents, for like SDRs and BDRs and things that, those are horizontal in nature, right? But what we're building is like a micro LLM, a private LLM that understands mortgage regulations, mortgage guidelines, right? That's a much different animal to build. But again, we could go build something similar in other industries if we built an LLM to support them.
So what will you be your advice? So now let's say that you have a group of early in career generalists and engineers or people who want to get into the industry. What would you advise to them to go make money building agents? What is your company building truth that they need to know?
If I have 4 children that are young adults that all have started their careers, and I've already started telling them, I'm like, look, you guys need to at least be aware of what is happening, right, with AI agents, because it has the potential, my one daughter is she's a CPA, right? And so she was an auditor and now she works for another company. But at the end of the day, I could see agents doing work in that field, right? Very easily. My other daughter's in tech. She works for a very large tech company and they have AI, but their platform's a SaaS platform. And I'm like, look, this could change what you do as a consultant implementing that technology. So I think that we're moving into an agentic world where all jobs will be reshaped in some form or fashion over the next, could be 3 years from now, it could be 10, but it's going to move
Right.
and I see it moving really fast.
But wouldn't you advise, 'cause I thought you were gonna go with this, is wouldn't you advise, people with a lot of energy and passion and technical knowledge to go find this slivers of the market that are sort of, process heavy, document heavy, arcane, and nobody's touching it, and they're in the I had no idea that mortgage was in the trillions. Like, that's a mind-boggling number to me. But I'm sure that there's other industries or problems are in the billions. So wouldn't you advise it to go find one of those and solve that problem? Is that how would they think about that?
Yeah, yeah. I mean, you notice when you asked me how big the market is, I never defined it, right? I didn't say, well, it's this big, right? Because one of I think the worst question that an investor ever asks me is, what's your total addressable market, right? I'm like, that's not the question you should ask, right? And to your point, right? Go find a niche in a market, own that niche, right? And expand it. You could be working in a field where it's on paper, your total addressable market's $100 million. It's still a big pie, right? And
Right.
so you start somewhere and you start building. And that's why I don't know how far we're going to go, right? Like, I don't know how many agents, but I look at it this way. I'm like, hey, our goal is we want 50 agents deployed by the end of the year, right? Because I look at it as a human thing, right? It's like, okay, if I have 50 agents and I'm saving the client money, then I know how I can quantify what that's worth. And if I was an investor looking at this business model, I'd be like, well, okay, that's a pretty interesting model, right? So,
Right.
um,
Right.
so yeah, I mean, if you're young and you're, bold and daring and you're entrepreneurial but the thing you have to have is you have to have a domain expert tell you how this has to work, right? So,
Right.
so you might be the smartest guy in the room from a technology perspective, but if you don't understand the industry you're deploying the agent into, then you gotta figure that piece out, right? So you need somebody with domain expertise on your team to build an agent for an industry.
Yeah, no, I agree with that. So are you VC backed? Do you take money from investors? How do you get this apparatus stood up and running?
Yeah, I mean, we've raised money, but it's interesting, right? And what I see now is we have investors knocking on our door that want to invest, and I'm like, okay, we're fine. Like it's like
This is
I
this
don't
is a
want
no-brainer,
I
Jim.
don't.
You're gonna about to print money. This is a no-brainer. This is an incredible
Yeah, I
business.
mean, that's the thing, right? So everybody's like, well, when are you going to do a Series A? I'm like, what would I do a Series A for? The only reason we do a Series A is if some shareholders wanted to take some money out off the table. That's fine. Like if you have, what I would call like legacy investors that came in 3, 4 years ago, maybe, right? But at the end of the day, you know, this will print money, right? So it's like it's a high margin business, and we should be able to reinvest that cash, um, in development of the product, and and even from a sales perspective, we haven't really even hit go on the sales side, and we're getting calls every day. So it's kind of like and that's the big thing. It's like, how are we gonna ramp this company to 10 million ARR and have less than 20 people? Because that's my goal, right? So I'm having to build AI agents that help enable onboarding, right? Because I'm like, I'm not I'm not gonna build a people company when I'm trying to talk to people about it, building agents, right?
Right.
That's like kind of hypocritical, right? I'm like, hey, get rid of all your people, but at the end of the day, I'm building a company with people. No, I mean, and I think investors struggle with that because we're going to be lean and mean. It's like, well, don't you have to hire more people? I'm like, no, I don't have to hire more people.
That's amazing. So you're on the same path. A lot of our circle of friends and people using paid are of becoming the $1 million per employee kind of company run rate.
Yeah, that's what I want. I mean, that's our goal. And I mean, it's like drink your own Kool-Aid, right? Drink the Kool-Aid. Like if we're building agents, we might as well be able to act like agents and build a company that is run by agents. I mean, right?
That's fantastic. That's fantastic. Absolutely. Jim, it's been such a pleasure to have you on this podcast. That story is incredible. You found an incredible I don't even want to call it niche, because how could a $15 trillion market be a niche? I think you found an incredible vein of inefficiencies, and you're gonna be super successful. Thanks again for spending time with us and advising our listeners on how to do the same.
Manny, I appreciate it. Look forward to catching up with you again soon. Take care.